Guys, this is the most important video that I have recorded so far. And this is very urgent because this is the best moment to invest in 10 years. And in this video, I'm going to show you the facts and the studies that back it up. And if you follow the strategies that I'm going to show you in this video, you will probably and statistically get rich. So you need to watch this video until the end so that you learn everything and you see why this is the best moment in 10 years to invest. And usually moments like this, it happen only every 10 or 15 or 20 years. So you should really follow the facts, follow the numbers, follow the studies, and do what rich people do, which is to invest when the prices are low, be a long-term investor, diversify, doing dollar cost averaging. But anyway, in this video, I'm going to back it up with all the data, and I'm going to show you why this is the most important moment in your life, in your investment career. What I'm going to show you in this video, by the way, it can apply to any kind of investment, can apply to crypto, to Bitcoin, to Ethereum, to stocks. And in fact, I'm going to show you the data that is more related to stocks because the stock market have been around for over 100 years, and there is a lot of data to back this up. But this works precisely the same way in any market, including in assets like crypto. And by the way, before I forget, this is not financial advice. I'm not a financial advisor. I'm just showing you facts and data, and you should do your own research, of course. And you should also fact check the data that I'm going to show you. Don't jump in the market. Don't go all in. Actually, in this video, I'm showing you precisely that you should not go all in the market. And I will show you the strategies that will help you to become rich. First, let's look at how long are we in the bear market. And if we look at the charts, let me pull up the. And apologies, guys, I had to do a voiceover because I don't know why, but the audio of this section didn't work. But here we have the S&P 500 chart, and as you can see, it started to decline in January 2022. Probably we could confirm the bear market 1 or 2 months after that, but we have been in the bear market for around 270 days. And according to these charts that you can see here, two of the biggest bear markets in the past were 365, 375 days long. So this means that we may be closer to a bottom, or we may eventually have reached the bottom, but we may also have some additional pain ahead. So you cannot go all in the market and invest a big lump sum in whatever you are trying to buy, S&P 500, NASDAQ, a stock, or crypto, because we don't know if there is more pain ahead. The world is a bit weird at the moment. We have crazy interest rate hikes, we have crazy inflation, we have a war, we have lockdowns. There is a lot of things going on. Supply chain disruptions, we have the Credit Suisse crisis, the British pound reaching all-time low since 1984 or 1985. So the macroeconomics are probably different from previous bear markets, but if we compare to the length of the longest bear markets that we had before, we have at maximum 3 to 4 months of additional pain ahead of us, meaning that if you start slowly investing now and wait, time in the market beats timing the market, you will probably do well. But let me show you more data because it's almost impossible to time the market, to understand when exactly is the bottom. No one can do that. No one can buy at exact bottom and sell at the top. And if you miss the best days in the market, you will miss the biggest gains. Timing the market makes you rich. Timing the market makes you poor. Look at this table here. This table here shows the stock market return since 1930. Okay, this is 90 years. If you miss just the 90 best days of the last 90 years, which is like 21,252 days, if you miss the best 90 days of the 21,252 days, so if you miss those 0.43% of market days, instead of having a return of 17,000%, you will have earned only 28%. It's crazy. So just for inflation, 28% would actually represent a 94% loss because of inflation, okay? So if you try to time the market and you missed those best days, you will miss most of the gains. And I will also show you later some data that show that the best days in the market come after the worst days. So if you try to avoid the worst days by being out of the market, probably you will also miss the best day. Another thing is that you should be a long-term investor. This chart here shows the S&P 500 total return, the percentage of positive periods. So if you look, for example, the 1 year periods, 75% of the 1 year periods of the S&P 500 were positive. But if you go to 5 year periods, 88% of the 5 year periods in the S&P 500 were positive. And if you go to 10 years, 94% of all the 10-year periods in the S&P 500 were positive, meaning that you most likely are going to have positive returns over 10 years. And this is exactly the same story with crypto and so on, because if you are not thinking about the long term, you shouldn't be buying any crypto anyway. Okay, and why do I say that timing the market, really buying at the bottom, is impossible? Well, because according to this chart here, 80% of the market single best days come within 2 weeks of the single worst days. So the best days in the market, and this is the S&P 500, but probably you can apply the same to tech stocks, to crypto, and so on. The best days in the market, 80% of the best days come within 2 weeks of the single worst days. So if you try to avoid those worst days, you will probably also be missing the best days. So what's the best strategy to grab those best days? Well, stay in the market, be a long-term investor, and do dollar cost averaging. Because, okay, I don't know if the market is going to recover or not. So let me change here to Bitcoin, for example. Okay, so we have here, for example, the Bitcoin chart. And looking at this chart, so at the moment, Bitcoin is around $20,000. There was a point in time went to $67,000 in November last year. But let's go back in time when Bitcoin was around here. Let's go back to June, July 2019. Okay, now, so let's say you bought Bitcoin here. And then the market starts to drop, like it was at $11,000 and starts to drop to $8,000. And you believe that Bitcoin is a good asset. So you go and buy again at $8,000. You always dollar cost averaging. You buy it again here, you buy it again here, you buy it again here. So as you see, you don't know what the bottom of the market is. But if you keep dollar cost averaging, you may hit the Bitcoin bottom, right? You don't know, but if I keep dollar cost averaging, I bought it here. Well, this was not a bottom. This was a peak of this period, but I bought again here and it went up a little bit. Then I bought again here, which was close to the bottom. I buy again here. I buy again here. Maybe I buy again here. And when you notice, you are actually in a very good position for the bull market, because if you were doing dollar cost averaging during this phase, now you will be doing quite okay, because you have been buying at maybe an average price of like $10,000, and now Bitcoin price was at $20,000. Maybe you took some profit around this area. So yeah, you will be doing quite well. So what you need to do now is also to start dollar cost averaging here, right? You should be dollar cost averaging whatever it is the asset that you like to buy, right? You can be dollar cost averaging NASDAQ, the S&P 500, your favorite stocks, or your favorite cryptocurrencies. And you should also do some dollar cost averaging with some altcoins and have a well-diversified portfolio, maybe having like 10 altcoins part of your portfolio, because these altcoins may give you outstanding returns, right? The Bitcoin market may give you like a 2x, 3x in the near future, but the altcoins may give you sometimes like 20x, 30x, but you don't know which altcoins are going to perform that well. So maybe it's better you diversify. And if you have 10 altcoins, maybe 3 of them perform very, very well. 3 or 4 of them maybe like break even, and maybe 3 of them go to zero. So don't put all your eggs in the same basket. And by the way, talking about bottoms, I have some indicators. Actually, I already made a video about this. You can check the video here at the top. But if you use some of the indicators to spot the bear market, all of them tell you that we are in the bear market and that the Bitcoin price is cheap. So you should dollar cost averaging in this zone. This is the 2-year moving average. We are below the 2-year moving average. We are, if we look also our dollar cost averaging cheat sheet, which is one of my favorite tools, it basically combines some moving averages, and RSI is also telling us this bright green areas is basically telling us that you should be dollar cost averaging in this area. And let me show you another indicator. I also like very simple indicator, the moving average 50 crossing the moving average 200. And again, we have been, according to this indicator, we have been in the bear market since January 14. And if you dollar cost averaging in this area, you are definitely buying It's a very good discount. Again, I don't know if this price is going from 19,000 to 16,000 to 12,000, and that's why you should not invest all in. You should not invest a lump sum, but you should be buying a little bit. So if I have like $1,000 to invest over the next 3 months, I'm going to divide this $1,000 for let's say 12 weeks, and I invest every week a little bit, like $100 every week. That's what I would do. I was also checking these data, the diversification and the average investor. Did you know that the average investor does only 3.6% on average per year? And why is the average investor doing 3.6% when on average the S&P 500 is returning 9.5%? Well, the reason why is that people don't invest in the long term. People tend to be short-term investors. And, I totally understand, because when I was younger, I used to buy also stocks. Like, well, I was a student, like this was like 15 years ago. I bought Apple. I bought Apple a couple of times, and Apple stock went up like 15 or 20%. I was like, oh my God, 15, 20%, let me cash out. And that's the biggest mistake, right? Because if I bought Apple 15 years ago and I keep the stock, I'll be doing very well now. And the same with Bitcoin. I had Bitcoin in 2013 and I sold. I had Bitcoin in 2015. It went up a little bit and I sold. I had Bitcoin again in 2017. It went up a little bit and I sold. And I learned my lesson. Now I'm a long-term investor. Don't be this guy, the average investor that makes 3.6% per year, because he sells, or he or she sells when he's like performing like 10 or 20%. So I'm not saying that you should not take profit, but you should take profit when you have significant returns and when you identify the market cycles, right? A year ago, we were definitely on the top. The market was absolutely nuts, absolutely crazy. We had the NFTs selling for millions and millions of dollars. That's a sign that we are in extreme greedy market. So you need to identify these market trends. Like, now we are in a very good moment to invest. Now this is the time to buy in these decades. And then maybe in a few years from now, 5, 10 years from now, you can start taking profit. But don't take profit in a year from now or in 6 months, because that's now the game is played. Okay, another chart that I really want to share with you is this one here. So this basically shows from 1970 until 2020, if you invest in every absolute bottom versus doing dollar cost averaging, investing in the absolute bottom, if you can really perfectly time the bottom, you will perform only 22% better than doing dollar cost averaging. And look, this is a period of 50 years. Over 50 years, if you buy exactly the bottom instead of doing dollar cost averaging, you only outperform the dollar cost averaging by 22%. So this is just to show you, to confirm that dollar cost averaging is probably one of the best strategies ever, because even if you have perfect timing, you will only perform 22% better. And to always time the bottom of the market over all these years, well, it's better you win the lottery, because the likelihood of that happening is very, very, very slim. But again, if you dollar cost averaging, you don't need to worry. And you know why I really like dollar cost averaging? Because you can sleep at night. I don't care, I don't care if the market goes up or goes down. I just don't like when the market goes sideways. If you are dollar cost averaging, and you have a good cash management, if the market goes up, perfect, you are making money. If the market goes down, you are also happy, because now you are buying whatever is a stock or crypto with a discount. You need to have an investment thesis, right? And if you believe in Bitcoin, you believe in Bitcoin when Bitcoin is $50,000 or $20,000, right? And if Bitcoin is at $20,000, great, you can buy more. If you believe in Tesla or Apple, do you want it to be more expensive or cheaper? I don't care. If it is higher, good, I'm making money. If it is cheaper, good, I'm buying cheaper. But whatever is the asset, if you believe in the investment thesis, if you believe in that product, you should continue believing unless the conditions of the market change, right? Now, imagine Apple. Okay, let's have the example of the Apple stock. When I bought Apple stock 15 years ago, Steve Jobs was alive. And imagine, Steve Jobs passed away. Maybe for many people, that will be a good time to sell your Apple stock, because, Steve Jobs passed away. Steve Jobs was really the brain of Apple, and maybe the stock is not going to perform, the company is not going to perform as well after Steve Jobs passed away. However, in reality, Tim Cook has been doing a great job, and this Apple stock continues to go up. But as long as your investment thesis continues to be strong, you should continue to dollar cost averaging. All right, another important data that I want to show you here, I hope you can see the chart. You have here the worst 6-month periods in the stock market history. So you have here the worst 6 months periods in the history of the stock market. And as you can see here, some of these worst periods ever, the stock market declined 40%, 30 something percent, and currently the market declined like 20 something percent. The forward total results, as you can see here, in most cases within 6 months, the market was already recovered and performing very well, more than 2 digits. And within 1 year, on average, the stock market recovered by 12%. Within 3 years, the stock market went up 41% within 3 years of the crash. So this is also to show you that after periods of extreme bear market or big market crashes like the one that we have been seeing, after those periods, we have very positive, very green market, with the market growing double digit in the years after the market crash. And in fact, you will see the market on average gaining 4x within the following 10 years of the market crash. So please, you really need to zoom out, because traders may care about these small changes, right? Traders care about these small variations, right? But you don't need to care about this. You are here for the macro trend. You are here for the long term. You are here for these big, sweet, juicy movements. And so if the market, to be honest, we are here now, and the market, I don't know, Bitcoin is at 25,000, 20,000, 18,000. I don't care, because I'm doing dollar cost averaging, and the market will recover sooner or later. And look, this really applies to any market. So I'm going to type here, for example, Ethereum. Okay, let me add, actually, I want to add here Bitcoin. Let's look, we have Bitcoin, we have Ethereum. Let me change here to align. And let me add NASDAQ, the tech stocks. Okay, this one. And let me add Apple. Let me add Google, Alphabet, and Tesla. I'm just going to give you some examples. And Unity, by the way, I really like Unity. Unity software. Unity is responsible for so many cool games. And now that we are living this transition to the metaverse, I think this is a very interesting time to look at Unity. And let me move here to the beginning of the year. All right, so what we have here, Unity dropped 77% since the beginning of the year. Ether dropped 66%, Bitcoin dropped 60%, Tesla dropped 33%, Google 32%, and the NASDAQ index, the tech stocks, dropped on average 32%. If we still have the same fundamentals, if you still believe in these companies, in these crypto assets, now you should believe in them even more, because now really they are trading at a huge discount, and your investment thesis, your fundamentals are still the same, right? So what this tells me is that we are really trading at huge discounts, and I don't see any reason to not being dollar cost averaging at these prices. Really, if you like these companies, or even if you are thinking about like more stable companies, like let me remove these assets from here, and let me add, for example, Coca-Cola. Yes. Let me add Disney. Let me add Nike. And let me add McDonald's. Okay, and since the beginning of the year, don't get distracted with the Ethereum chart. Nike has dropped 49%. Do you think Nike is going out of business? Disney dropped 36%. McDonald's dropped 32%. Even Coca-Cola dropped a little bit, 3%. These are very stable businesses, right? You may argue that, okay, Ethereum is not that stable. Ethereum is a very recent technology, but looking at all the other assets, they are very stable assets. And if they were good a year ago, now they are even better, because now they are even cheaper. And the same with crypto, right? If you believe in a crypto a year ago, you should believe it even more now at the current prices. All right, guys, this is the message that I had for you today. This is the time to make money. You don't make money by buying Bitcoin at 50 or 60,000. I have this group of friends that call me when Bitcoin went up like 200%. They call me, oh, can let's have dinner. I want to talk about like crypto and Bitcoin. Yeah, bro, that's a bit late. And now that Bitcoin is at 20,000, no one calls me. And it's really sad because this is a time to make good investments. People FOMO in when crypto and stocks are going up 200, 300%, but they should be FOMOing in when they can buy these amazing assets, when they can buy Bitcoin and Ethereum at 50, 60, 70% discounts. And I'm not telling you, by the way, that you should FOMO in. I'm a big proponent of doing dollar cost averaging. So always have very good cash management. If I have $1,000 to invest, I invest $50 into Bitcoin every week. And maybe I invest a little bit in Ether, maybe a little bit altcoins, maybe a little bit stocks, and I invest consistently every week. And if you do like this, nothing can go wrong. Because as you saw before, the numbers and the statistics are by your side. All right, guys, that's all for today. If you like the video, give it a like and subscribe. It will really help to spread the word about my videos. And as always, I'll see you tomorrow.